Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 31st, 2025, and we're diving into Grainger's latest earnings report for the third quarter of 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Grainger has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Grainger reported net sales of $4.7 billion for Q3 2025, marking a 6.1% increase from last year. John, what are the key drivers behind this growth?
The growth in sales is primarily driven by volume growth and improved pricing strategies, especially in their endless assortment segment, which saw an 18.2% increase. However, the gross profit margin decreased by 60 basis points to 38.6%, mainly due to tariff-related inflation and inventory valuation challenges.
And how about their profitability?
On the profitability front, Grainger's adjusted EPS came in at $10.21, up 3.4% from last year, which is a positive sign. However, the operating margin on an adjusted basis decreased slightly by 40 basis points to 15.2%, reflecting some cost pressures.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $9.93 for this quarter. Grainger reported an adjusted EPS of $10.21, beating expectations by 28. John, how significant is this beat?
This is quite significant. Beating the forecasted EPS by 28 cents indicates strong operational performance and effective cost management. It also reflects positively on Grainger's ability to navigate the current economic challenges and deliver value to shareholders.
What does this mean for investor sentiment?
Investor sentiment is likely to be positive, as beating EPS expectations often boosts confidence in the company's future performance and strategic direction.
Strategic initiatives and market exit. Grainger has announced its intention to exit the UK market, including the planned divestiture of Cromwell. How is this impacting their financials, John?
The exit from the UK market has led to a significant non-cash loss, impacting the reported operating margin, which decreased by 460 basis points. However, on an adjusted basis, the impact is less severe. This strategic move allows Grainger to focus more on its core markets in North America and Japan.
What did the CEO have to say about this?
DG Macpherson, the CEO, emphasized their commitment to strong execution and industry-leading service, which they believe will continue to drive value for stakeholders despite the challenging environment.
Future outlook and guidance. Looking ahead, Grainger has updated its full-year guidance. What are the key highlights, John?
Grainger has narrowed its adjusted EPS guidance to a range of 39 to 39.75 cents, reflecting confidence in their operational strategies. They also expect sales growth between 3.9% and 4.7%, and operating cash flow in the range of $210 to $2.20 billion. Capital expenditures are projected to be between $625 and $675 billion.
How should investors interpret this guidance?
The updated guidance suggests a stable outlook with a focus on maintaining operational efficiency and strategic investments. It indicates that Grainger is well-positioned to manage through the current economic uncertainties.
Key takeaways. In summary, Grainger has delivered a solid performance in Q3 2025 with revenue growth and an EPS beat. The strategic exit from the UK market is a significant move, and the updated guidance reflects a stable outlook. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Grainger's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Grainger's performance in the comments below. Until next time.